I received a question recently and it reads like this. Hi, I am looking to purchase a home. I am tired of renting and it's just time to get a house. But I also owe a lot in taxes and I have some other outstanding debt. I'm thinking about filing for bankruptcy in order to prepare myself to purchase a home. I'm looking to purchase a home in the next 1 to 2 years. What would you recommend? Should I file for bankruptcy? Should I look at credit repair? Or should I address the taxes and the other debts accordingly so that I can prepare myself to purchase a home? That is a great question. So I'm going to answer that question for you today. And before I do, I want to introduce myself. So I'm Shanta Thomas. I have been in the tax and accounting space for nearly 20 years, 20 years next year. And I specifically specialize in tax strategy as well as tax resolution services. So tax strategy is all about helping you to make sure that you remain in compliance, but also are able to reduce your tax liabilities year over year. So how do we help you pay less in taxes? A lot of you know this as tax planning, but in order to do tax planning, there's a lot that goes into it. So that's why we call it tax strategy or advisory or consulting, whatever you want to call it. That's what I do. And in addition to that, I do tax resolution services, which helps you be able to navigate any outstanding large tax liabilities. We typically are looking at tax liabilities of about $40,000 or more that someone owes the IRS and or state, and we help them to navigate that process, reduce the tax liabilities, get into some sort of structured payment plan so that they can move forward and get that monkey off their back. So, and I like to do all of this through lots of education and support and services. So let's answer this question today. So this person has a home that they are looking at purchasing in the next year or two, and are not really sure what to do with their outstanding tax debt as well as some other liabilities outside of taxes. So let's talk about it. Here are some things that I want you, the person who sent me the question, and I'm not going to share the name, but the person who sent me the question, these are some of the things I want you to think about. Number one, do you have the money? So when it comes to purchasing a home, you need to put down 20%. If you don't put down 20%, there is what we call PMI. And depending on the price of the home, that could be, it can be a lot. It can really add up to a lot. I've seen some cases where it can be $500 extra a month in insurance. It's really just insurance that if you default, the bank has covered themselves because you didn't put down 20%. So even though they have these things out there like the FHA loans and things like that, they're still looking for you to put down 20%. And if you don't, you kind of get penalized with it with this PMI. So if you don't want to have that PMI, then you need to make sure that you're putting something in place so that you can have a lower monthly payment. So the first question is, do you have the money set aside to pay this debt? Which is going to be this mortgage that you're going to have. So you're going to have to pay that every month. And do you have the money set aside to do that? If you have a ton of credit card debt and also tax debt, then you may or may not have that money to pay for the mortgage. I would start looking at how much does all that cost on a monthly basis. So one of the things I did recently in my own life was I sat down and I looked at how much money I was spending month over month on consumer debt. So anything outside of mortgage. And when I did all of mine, it was between $2,000 and $3,000 a month that I was spending. Didn't even realize I was spending $2,000 to $3,000 a month on consumer debt. And this is like credit cards, all those types of things. So car payment too. So I began to put a process in place to pay those things off. So I did this starting in January. I got really, really active with doing this. And within 5 months, I have paid our things down to where we only have about $1,200 a month that we have in debts. And by the end of next month, so in about a month or so, we will be down to just $300 a month in consumer debts. Now, that doesn't include other things like Netflix, or those of you who might have Roku or Disney or Disney Plus or ESPN. It doesn't include some of the other things that you pay for on a monthly basis, these recurring monthly payments. I do have some of those things, but I don't have cable. I got rid of cable a long time ago. I have internet. I have some basic things, but I got rid of a lot of things that I didn't need because that was going to allow me to free up my monthly income so I could actually afford more in terms of a home and travel and some of the other things that I wanted to do. So one of the first things I want you to do is to sit down and look at your budget. And if you don't have a budget, you need to create a budget. You need to see where your money is going. So is your money going towards consumer debts that you can pay off? Is your money going towards other things? How much money do you have in savings? These are all questions that you need to look at before you even consider purchasing a house. Yes, you can get into a house at 3.5% through an FHA loan. Sometimes there are other programs where you can get in with even less down. But and when I'm saying 3.5%, that's down. That's not your monthly payment. But you need to see what all the things are so that you are not house poor. I have been house poor before, and it's one of the worst places that you can be. You don't want to be house poor. So you want to make sure that you are taking your money and allocating it, setting it aside so that you can pay off the things that can be paid off. So even once you get this house, it doesn't become a burden to you. You want it to be something that you feel good about and that you wake up each day like, I have this new house. You don't want it to feel like this heavy burden. So that's the first thing. The second thing that you really want to do when it comes to your tax debt is you need to address it. So if you are not in an installment, or even if you are in an installment, but the installment is high, maybe you set it up a couple of years ago because you were making more money. Well, now you want to try to readdress that installment so that you can reduce your payments. And so try to work on reducing the payments in an installment. Maybe you actually qualify for an offer and compromise. These are things that we look at with our clients to make sure that they maintain either their installments or their offers. And one of the things we address is how much income they're making. So if they are making less money than they were before, we try to see if there are other options for them, because there are more options if you're making less now than you did before. In addition to that, if they're not in any sort of installment, we make sure they get into an installment, because if they don't, any money they do have, they could get a lien, they could get a levy, they could have that money stripped from them, or they could have that money frozen in an account. They could also, if they purchase that house, guess what? They could be in a situation where that house now could have a lien put against it, which means they now can't sell that house. They can't do anything with that house if they ever want to get to the point they want to sell it, because the IRS has come in and put a lien on it because they owed them money and they didn't address it. So the sooner you address issues, the better. Not only that, for those of you who like to travel, you can also get a lien sort of put on your passport so that you can't travel outside of the country. Like, who wants to be stuck in the country if you're wanting to travel? You get ready to go on a trip and you get ready to board the airplane, and like, you can't board because you owe the IRS, $100,000. And a lot of people think that these liens and levies start at these crazy amounts. They don't. You don't have to have a crazy amount to that you owe before these can get put in place. So the IRS wants their money. And if you aren't doing what you need to do, a lien, a levy can be put in place so that they can get their money and so that you can't utilize your money. So that's the second thing, is I would make sure that you address those tax issues. One of the other things that we tell people if they have outstanding tax issues is don't try to navigate it yourself, because everything you say and everything you do can and will be used against you when it comes to the IRS. So it's just like when you think about, remember those old cop shows and stuff? They would say, they would read the rights to the person who was getting arrested. It's the same thing when it comes to the IRS. No, you're not getting arrested, but everything you say can and will be used against you. So they will use the things that you say when you call them and use it against you to make sure that you pay more, to possibly not work with you. So they use it to their advantage, is what I'm saying. So what you want to do is you want to make sure that you have someone representing you so that they say and do the right things on your behalf. You don't want to say the wrong things. You don't want to do the wrong things. And you also want to be well informed, because if you don't know your rights, you can be easily taken advantage of. Now, here's the thing about the IRS. It's just like anywhere else. You have some people who are really great that work at the IRS, but you also have some people who truly suck that work at the IRS. And guess what? If they really suck, it's not their job to tell you what you're doing wrong. And and how to fix that thing, right? They want their money. So they may not tell you that it's a simple calculation error or something like that on the return. And instead of you owing a lot of money, you owe much, much less. And I actually had a situation like this with a client who owed over six figures. But once we sat down and actually made some adjustments to the return, they actually only owed 6,000. So that's a huge, huge difference. But had they not reached out to me for support, they would have started to pay that six-figure amount back, and they didn't even owe it. So what you don't want to do is go into the IRS trying to navigate this and trying to do this on your own, because you can be taken advantage of. So you want to make sure that you are addressing those things and you have someone that's representing you to address it with the IRS so that you can navigate that process and get something in place. You also want to need something in place when you go to get the house, because guess what? They're going to see that you have outstanding tax debt. One of the things they're going to ask you is for your prior year returns. What they're going to see is that you have outstanding tax debt. And if you owe a lot of money, $500, $600, $700 a month, I've heard of someone at the highest, we're paying $20,000 a month. If you're paying that amount each month, guess what's happening? They're including that monthly payment when they're looking at what you can afford in terms of a house. So that's going to impact what you can and can't get in terms of a home. The last thing I want to address is if you have outstanding debts, whether it's credit cards and tax debts, and whether or not you should file for bankruptcy is whether or not you should file for bankruptcy. So one of the things that we look at when we're working with our clients is if bankruptcy makes sense. And for some people, bankruptcy can make sense. For a lot of our clients, it doesn't make sense. And so it's not the best way to go. Also, when you file for bankruptcy, guess what? It's going to make buying that house a lot more challenging. And you're going to need more time before you can actually purchase the home. So you're going to have to wait a period of time before you can even look at purchasing the house, because you have that bankruptcy on there and they're going to see that bankruptcy. So you want to make sure that you are doing what's best to move you closer to purchasing the house. And that's not going to really be filing bankruptcy. So what you should be doing, again, is outlining your budget. Make sure you have a clear path to get to zero consumer debt, because that's going to increase how much you can afford in terms of a home. And you want to make sure that you can put down 20% if you can, so that you're not paying that PMI. So if you can put down 20%, that means you're going to have to save. So again, the more you can pay down on those credit card debts and other debts, the better off you're going to be, because you'll be able to put more money aside for the house. The next thing is, when it comes to your tax debt, you want to make sure that you have a plan in place to address the tax debt. And you want to clear that up, at least getting some sort of monthly payment that's super low, or that you have a path to pay that off before you purchase a home, because that monthly amount that you're going to pay, if you're in some sort of payment plan, is going to go towards how much you can afford in terms of a house. So that's going to impact that. And the third thing is, if you are looking to do this, I would not recommend bankruptcy, because bankruptcy is going to delay how long it's going to take you before you can actually get a home in the first place. It's also going to impact the value of the home that you can purchase. It's going to impact everything, and all of your rates from your credit report are going to be higher, because your credit report is going to show poorly. So you want to make sure that you are taking the time to address those three things: your budget and paying down your debts and saving. Also making sure that you are addressing your outstanding tax liabilities and your bankruptcy. I would not go into a bankruptcy if you are looking to do that. And looking to purchase a home. So that's all I have for you today. I hope this answers your question. And if you have a question, you can submit those questions to us. We send out an email to our email list. So jump on our email list so that you can get on our schedule, so that you can ask us some questions. Also, don't forget to sign up for our newsletter, as well as we do a weekly blog. You can find us on LinkedIn, Facebook, YouTube, and I would love to work with you. So you can find me at shantathomas.com, www.shanta, Thomas.com. And I am looking forward to working with you. Have an amazing day.